But we begin tonight with what was a rough day on the markets. It all started with China retaliating to Donald Trump's tariffs, and that made investors nervous, and the reaction was quick. Here at home, the TSX side's biggest decline since the start of the COVID-19 crisis. Some of the largest losses came from energy and mining, major players in Canada's economy. And in the U.S., the Dow Jones also took a hit. It posted its largest two-day decline since the emerging pandemic caused global panic during Trump's first term. So let's go to our business and economics reporter, Heydari. Anis, that was quite the tumble that we saw happen on the markets today. Take us back to the beginning here. What set this all off?
Investors basically shifted their market sell-off that started yesterday into a higher gear. The NASDAQ down 5.8%. New York Stock Exchange down more than 5%. Toronto Stock Exchange down more than 4.5%. The S&P 500 down nearly 6%. And I know that's a lot of numbers. So if we look at the last 5 days, you can really see this drop become more clear. Yesterday it starts, and then today it continues. And we are seeing just a lot of financial losses through these numbers. There's a sliver of positivity, sort of, on the Toronto Stock Exchange. Today's losses don't make the worst 5 ever single-day drops, but this is still not great if we narrow that history down. It's been the worst week for many markets here and in the U.S. since 2020, notably when those COVID-19 restrictions started affecting the global economy. Now, that was a steeper, worse drop back then, but at least as far as the past few years go, it took half the world shutting down to exceed what we're seeing here. Markets like this aren't just reflecting how much investments like your RSP are worth or not worth, so to speak. They are a reflection of what big economic players think is coming. A market index is pointing to what investors think the future is for their money, and right now that reflection is at best cloudy, but it looks red with potential money being lost, Sarah.
Anis, I feel like everyone was bracing for this as a possible reaction, given all the tariff talk. And then, of course, we had Liberation Day. So what is being said as to what has caused this?
It is still tariffs, specifically China introducing measures to strike back at the U.S. tariffs from earlier this week. Here's what a market watcher had to say.
What we've seen today is that markets are pricing in the implications of tariffs that had not yet been priced into those markets, and as a result, we know that we have information now that earnings are going to be negatively impacted, and that ultimately, the wealth that's been created within those markets is getting hit quite hard.
So if I take that out of economistese for you, basically economic movers and shakers did not think that these tariffs would happen, or if they did, they thought the tariffs would be smaller than they are. And after seeing what both the United States and China are doing with tariffs and counter tariffs, the people who put money into financial markets, they saw these announcements, and they think they are going to earn less money. Essentially, everyone connected to the markets, at least through what they are buying and selling, demonstrates that they are uneasy about the future. Even if you don't have investments, though, this affects your wallet, too, eventually. The chair of the U.S. Federal Reserve was talking about these tariffs today, and he said they'll likely cause higher inflation, and that would definitely affect everybody, whether they have investments or not, Sarah.
Anis, thanks for breaking that down, translating it, as you say, so that everyone can help understand it. That's CBC News business and economics reporter Anis Heydari.